Good morning, good afternoon, and good evening, folks, depending on whatever time frame you guys are based in. This is Naeem Aslam, Chief Market Analyst at AvaTrade. Please give me a sound test if you can hear me and if you can see my screen, so please say yes or no. Okay, seems like everything is working absolutely fine. Montreal. Oh, well, hello. Low quality audio. Is that for everyone, or is it just for one person? So how's the audio quality? Is Okay, so audio quality is good. Okay, so whoever is having a problem, so perhaps that is the issue on your side, because everyone else is saying to me that the audio quality is good. Look, it is absolutely my pleasure to be with you guys. As always, this is our masterclass, and this particular masterclass couldn't have come at any other better time than today, given what we have seen in this particular stock market over the period of this week. The stock market has been absolutely roaring. We have seen record rally for the S&P 500 index, which represents the broader U.S. stock market, and of course for the Dow Jones index as well. We will talk all of that in a bit. And before we go ahead, just let me briefly introduce about myself. So my name, as I explained earlier, is Naeem Azam. I work as a chief market analyst at AvaTrade. I come with a wealth of 15 years of trading experience. During this period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader for Bank of America as well. Now, of course, currently it is in my role, it is my responsibility to produce daily research for you guys, and I hope that you are taking full advantage of that research on a daily basis. Now, that's a little bit about myself. Now let's dig straight into our presentation. What I like to do during this particular webinar is that I like you guys to continue ask me any questions as they come along, and I really kind of want you guys to feel absolutely free in asking any questions. There is no such thing called naive question or a stupid question. So feel free to throw as many questions whenever you like. I will address them on an occasional basis throughout this interview, this webinar. I will be checking them, and then I will be answering them as we go along. So I'll highly encourage you guys to ask me as many questions as you can, because this is your opportunity to learn, and then that is why I'm here for. So as always, before we begin, just a small disclaimer: anything which will be discussed in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider can people see my screen? Because some people are saying that they can't see my screen. You should be able to see my screen now. Yeah, okay, great. Okay, thank you for being so active. So anything which will be discussed cannot be perceived as an advice, and the full disclaimer is right in front of you. Now, folks, if you are trading equities, if you are trading Forex, or if you're trading commodities, I cannot stress enough the importance of you guys being on Twitter. But the reason that I really love Twitter is because this gives you that instant information in a very concise way. You don't have to go and read out the full page-long document or an article. So you can just read 2 lines, and it gives you all the information that you read with respect to that particular stock, or with that particular Forex pair or a commodity. So that is quite an intriguing aspect of Twitter. And of course, all credit goes to Donald Trump, who has made Twitter so famous. Not that I'm not saying that I support Donald Trump in any way, but I think it is fair to say that Twitter has become a lot more popular, and has come as a tool for professional institutional traders to keep a very close eye, because everything breaks on Twitter now more whether we are talking about corporate earnings, whether we are speaking of corporate announcement, central bank's announcement, views from people who are in a position of power. So it is quite important for you guys. So this is why I think it is important for you guys to follow the right people, so and encourage and get involved in a discussion. So on that topic, my Twitter handle is right in front of you guys, which is Naeem Aslam 23. I will show that to you in a bit as well, where the Twitter handle is and then how to do that. And then of course for AvaTrade, it is AvaTrade. Now, on a daily basis, we produce two different videos on the YouTube. I do YouTube Live, and that is, again, your opportunity on a daily basis to learn about the markets and ask questions as we go along. And for those traders who do have good experience, I also produce technical videos discussing various parts of technical aspects of the market in terms of entry and the technical analysis in a lot more greater detail. So let me go through that first of all before we go any further. So what I'm going to do is I'm going to show you my Twitter first of all. So what you see is from Twitter. This is the Twitter handle. So if you go to on the Twitter, you'll be able to find me directly from there. And as you can see, some really great information like Turkish lira appreciates 3% versus the dollar after Erdogan comments. What were the comments? The central bank's duty is to ensure price stability. And Turkey, Erdogan determined to reduce inflation to single digit. So because of Erdogan's these comments, we've seen appreciation in Turkish lira against the dollar. That's what pretty much it. And then you have these videos going on a daily basis, less than 2 minutes. It gives you all the flavor about the market, what to look for, what are the factors which are going to move the market, what asset classes can really move with respect to that. And then as you can see, there are several different other tweets throughout the day. Similarly for AvaTrade, make sure when you are following, you follow the right account, which has the blue tick, because obviously we are verified by Twitter. You don't want it to get yourself involved onto the wrong platform and then following the wrong or a fake account. So that's, again, very encouraging for you. I'm encouraging you guys to do that. In relation to YouTube channel, this is the YouTube channel right over here, AvaTrade. And you will see all the live Q&A sessions, daily videos that we do for you guys, and then several other videos over there as well. Similarly, on YouTube, this is my YouTube channel as well. So if you wanted to get engaged on certain questions, if you have certain questions in relation to any of the trades or in any of the comments that I'm making, you are highly encouraged to do that. And if you wanted to see any of my TV interviews that I do on a daily, pretty much on a weekly basis, again, you are encouraged to look at them as well. Hit subscribe if you like them, because then, obviously you get notifications directly when the video is posted or whenever we are going live on our YouTube channels. So that's a little bit about that background. So let's continue with our presentation. So at AvaTrade, we have this unique technology, which is called AvaProtect. It's a revolutionary one-click risk management tool available on AvaTrade Web Trader and AvaTrade App Go. So with AvaProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends, you have an open position that is losing, AvaTrade will reimburse the loss directly into your trading account. The only cost is the AvaProtect fee itself. So I think it's a great tool for you guys to have it on your platform if you are unsure about any of the positions. So again, I think it is good to have a look at it as well. Now, in order to do that, activating AvaProtect is easy, only requires a few simple steps. Tap to open Web Trader or AvaTrade app, select an instrument, click on AvaProtection icon, choose the protection duration, see the fee and the expiry date, complete the trade, and that's it. So you are pretty much protected. Now, in terms of our agenda today, what we're going to cover is we will be looking at the stock indices overall, see how those stock indices have performed over the period, where are the buy and sell opportunities are with respect to those indices. We will be measuring the strength of each sector. So briefly, I will explain that which index is really, or which sector is really in the leads now, and then how that is performing. And then special stocks under COVID-19. Again, we'll be looking at some of the streaming companies, airlines, pharma, online retailers, energy, and banks. So these are the pretty much sectors that we will be looking at. So of course, we have quite a lot to cover in our session. So let's get on with it without any further delay. Now, first of all, folks, what is quite important over here is that this is your S&P 500 index. So what we're going to do is we're going to measure, and I'm going to explain you what each index covers. So S&P 500 index covers these top 500 companies over in the United States. And similarly for the Dow Jones, the Dow Jones index, this covers the top 30 stocks over in the United States. Now, as for the NASDAQ covers the top 100 tech companies over in the United States, right? So what you can say in the other words is that the NASDAQ is your tech index. S&P 500 is a broader representation of the US stock market. It gives you the overall flavor and the color about the stock market. And the Dow Jones is giving you very specific top 30 stocks over in the United States. Now, obviously, what we're looking at in terms of a time frame is we're looking at the daily time frame. So this particular price action, which was on Monday, this pushed the stock market to all-time high. So the Dow Jones index made an all-time high on Monday, and now the market is again trying to reach that all-time high. Now, in terms of a price position, obviously the much better angle, the much better price entry is where the 50-day simple moving average is. Now, where is that 50-day simple moving average? So this one over here is your 50-day simple moving average. This one over here is your 100-day simple moving average. And then the green one is your 200-day simple moving averages. All of these averages will remain the same on all of the charts. If you want to add these moving averages, you go to insert, you go to indicator, you go to trend, and then from here you select moving averages. From here, you keep changing the period and the color as you go. Keep the method as simple. Now, the first thing that we always measure is, in order to measure the strength of the index, is that how far it is from its all-time high. So clearly the price with respect to the Dow Jones is quite close to its all-time high. And then secondly, how far the price is with respect to its 50-day simple moving average, 100-day and 200-day. Now, clearly the price has gone too far and too fast. So that means a retracement is due, but the Dow Jones index is trading very, very close to its all-time high. What about the S&P 500 index? Yes, it is also trading quite away from its two moving averages, the important one, the 50 and 100, but it is trading quite far from its all-time high. The price is literally about 30% of this particular price. On the Monday's price action. So clearly we are not there yet. Clearly the S&P 500 index is not the strongest index currently. And when we look at the Dow and NASDAQ, we can clearly see that the NASDAQ is trading very close to its 50-day simple moving average, meaning this is no longer the leading index right now. And also it is trading well away from its all-time high. So the tech sector, in other words, is not the leading sector currently. This is where you can actually find opportunities in terms of a tech stock. So like the stocks like Amazon, stocks like Microsoft, stocks like Apple, stocks like Netflix, Disney, all of these ones could be a great opportunity, which we will have a look in a minute. Now, with respect to the S&P 500 index, or with respect to the Dow Jones, This is more of a cyclical sectors, meaning we need to be the momentum where we are seeing more these days is obviously your energy stocks, your material stocks, and of course your airlines and hospitality sector. So that is what the Dow Jones is really representing with the top 30 stocks. So in terms of a momentum, we wanted to look at companies like Ryanair, United Air, and Boeing, Rolls-Royce. These are the companies that you could be, really looking at in terms of a tourism sector. You wanted to look at IHG, Marriott Hotel, and of course, pharma is one of the most active sector right now. And all this particular move, this particular move only happened because of Pfizer coming out with this vaccine. So obviously, healthcare is the most leading sector right now. And that means that, that is, if you are looking for a momentum, if you wanted to ride the momentum, then that is the place where you wanted to focus on. Now, that is a little bit about the indices, right? Now, because this particular webinar is not about indices, it is about stocks. So we are going to continue and shift our focus towards stocks. And we're going to see where the momentum is with respect to that. Now, first of all, when we look at Tesla, and what we see is that the price is trading in around these price levels. So let me delete, first of all, these two lines because they really don't make sense anymore. So what we see is that the price has moved above its 200-day simple moving average, which is positive, which is something that we want to see. Now, in terms of our support zone, right now, our support zone is right over here. So the price is literally coming out of this support zone. Remember one thing, we can never ever predict the exact bottom, and we can never, it is incredibly hard to pick the exact bottom as well. So we can always fish for the bottom, and the bottom was right over here. Now, of course, the prices are coming out of that, but it can go back into here, and then so that could be a great entry point in terms of Tesla. In addition to that, the RSI at the same time, which represents near 30, represents oversold, meaning you can buy over here, and then near 70 means overbought, meaning you can sell at this particular area. So because this is close enough to the buy area, so what we can do is we can look to buy it today or tomorrow in around this particular area. Put your stop losses just below the previous low. So the low of this candle, this is where you wanted to put your stop losses in terms of Tesla. And in terms of your really target, the first target should be no less than where you wanted to shave some profit off is near 681. So that gives you a pretty decent risk to reward ratio with respect to this particular price. Now, what about the next particular stock, your banking stock, and that is Bank of America. What does Bank of America is really telling you on the daily time frame? First of all, on the daily time frame, what it shows is that there has been this massive momentum to the upside for the last few days, right? So yesterday, from here, as you can see, since on the 9th of November, again from Monday and Tuesday, the price has been surging, but obviously the surge also happened the day before as that as well. Now the prices are moving out. Now this has left this huge gap, this gap area, which can certainly can come back and refill that area. Whether that's going to happen today, tomorrow, later, in a month or 2 months, we don't know. But right now, if you like to get into this particular trade, the best area to get into that trade, in my opinion, would be a breakout trade, meaning on top of this particular candle. That is one of the area which gives you better confirmation. So that would be the entry point for that one could be 28.25. Now, the other area of support where if you can practice patience, because trading is all about patience. Trading is not about taking, the decisions which are just purely based on emotions. Then you may want to wait for the price to get near these price levels, so between 24.49 to 25.24. This is a great area for a price for you to get back into the trade. And in terms of resistance, you may want to target the top of this particular curve. So what you wanted to target is the area of 32 to 33. So this remains your resistance area. So again, two entry points. One entry point is just right on top of this particular candle. The other entry point, the better entry point, is just right over here. I'm going to do one more stock before I will go and then look at your questions in the meantime. Now, with respect to the Netflix on the daily time frame, again, we are seeing massive retracement with respect to Netflix, which is really good. And the immediate buy level with respect to Netflix is near its 200-day simple moving average. Clearly, the price has dropped below the 50 and 100-day simple moving averages, which is a really great thing, because if you are looking to buy, you wanted to buy for the price between 452 to 462, which the price, by the way, did touch yesterday. Price can certainly go back over here. You can go right into this price level right now, but then you have to have your stop losses below the 200-day simple moving average. Just give yourself that big break that you really kind of, that can save you. And then in terms of resistance, what you wanted to look at is the area which is between 547 and runs all the way to perhaps 556. So this is your area of resistance. This is your area of entry. Now, let me have a quick look at some of the questions that you guys may be asking, and let me just review them in a bit. Okay, what does the 50, 100, and in the simple moving averages? Alex, what do you mean? These are simple moving averages as I've shown them before. Determine there will be a momentum. Okay, so someone is asking, how do I determine there will be momentum? So the momentum is two ways of determining that. Is number one, look at the price with respect to the moving averages. See where the price is trading. If the price is trading above all the moving averages, obviously that is a momentum stock, or that is a momentum index. So for example, S&P 500 index, the Dow Jones, they are all trading well above those important moving averages. Okay, what is the support zone? So the support zone basically refers to an area which is also called a buy area. Like I said to you, we cannot pick the exact bottom. We can fish for a better entry. We can strive for a better entry towards an area where odds are stacked in our favor. That area is referred as support zone or the buy area. The area where the prices are likely to reverse their direction, likely to move lower, that area is known as resistance area or the sell area. Okay, so Grant is asking me, how do I know that the price will not drop further from that area, from below the moving averages? I can never, and no one can ever give you the perfect, say that, okay, price will not drop from that particular area. But when we look at the previous analysis, the previous price action, we can say that every time the price moves below the 50-day, 200-day moving average and moves back above the 200-day moving average, these are the areas where the prices are likely to bounce back up massively. For example, right over here, the price came near its 100-day simple moving average, and then it bounced back up. At the same time, the price was also close to its 50-day simple moving average. It came and then it bounced back up. Again, when the price came close to its 200-day simple moving average, which was the previous area of support or the area of buy, the price moved sharply back up. Again, over here, the price dropped below that. That is perfectly fine. That's why we have our stop losses in place. It is all about managing your stop losses and then dealing with your stop losses accordingly, because that is what really matters. There are a lot of questions coming over here. Minimum trade size of stocks on AvaTrade website, most are 1 or 10, for example, but somehow it says 1 or 10. I don't know about Dimok about that. Maybe contact the customer client service. I don't really deal with that sort of stuff. Does one need to trade? How much does one need to trade stocks? I don't know what you mean by that, Lennis. How much does one need to trade stocks? Are you asking me that how can one trade stocks? I mean, like these are the stocks that I'm talking to you right now. So you can just click buy and sell straight from AvaTrade at Go. So that is pretty much easy. And if you're asking about the size, you have to determine the size in terms of your stop losses, how big the stop loss is, and if you are comfortable with your stop for level price. Is it true that gaps will always close? Mostly, Grant, mostly they do. Okay, and let me see if there are more questions. How do you know for sure this really, okay, do you go to a lower time frame for the entry from the daily? Yes, Elroy, certainly you go to a lower time frame, you can. Is this time to trade? Okay, Sanjan, is it time to trade? I think there are opportunities like we have just mentioned now. So you can certainly look at those entries. What is the difference between 50 moving average and 100 moving average? Okay, so these moving average, good question there. So these moving averages, so this is the average price for the Netflix over the 50 days. This is the average price for Netflix for over 100 days. This is the average price for 200 days. So this is the average price for a particular period, whether it's a 50-day, whether it's 100 or 200 days. That's the difference. How do you know that the stock has for sure entered the resistance area? I think I've explained that. Could you explain support and resistance again? Lennis, please go back because and have a look at the recording because I have to go through quite a lot. How do you put the moving averages line in purple, yellow? I've explained that. Okay, Tesla, what is your recommendation? Entry point, explain that. How much quantity do you need actually? Again, depending on your position and your portfolio size. Okay, so I think a lot of questions are coming that how much we should trade and then what should be the position size. You know what? We will do a separate webinar on that, a masterclass on that in terms of a risk management. There are more risk management questions. The recording of this one will be available on the YouTube channel, so have a look on that for sure on my YouTube and of course on AvaTrade's YouTube channel as well. All right, so now quickly we're going to look at Amazon. Great opportunity right now because Amazon is under tremendous selling pressure. The price is dropping massively these days, and I think we should wait for the price to come to us. It's 200-day simple moving average. That is the area that we should look at. However, if the price crosses above the 100-day simple moving average, we can take the breakout trade then. But otherwise, I think we can wait for the prices to come towards this 200-day simple moving average. Johnson & Johnson, obviously the price is moving very high because of what is happening with Pfizer. The prices are continuing to move higher. So what we want to do right now is we don't want to get involved into Johnson & Johnson because Johnson & Johnson is also going to come up with its coronavirus vaccine news. So we wanted to maybe stay away from this one because we don't know how the results are going to be. With respect to Boeing, for sure, this is a great opportunity to buy. Look at this one, how the prices came into this area of support and then it started to move higher. This area of support, folks, we've mentioned this area in our previous How to Trade Stocks webinar. So if you haven't seen that again on YouTube, you can see those webinars and then you will see them, but the prices bounced sharply and nicely from our defined area. So what we want to do right now is wait for the prices to cross above the 50-day simple moving average, then 203 and then 100-day simple moving average. Those are the price areas that we kind of wanted to focus on. With respect to Goldman Sachs, again, this stock is still it used to be quite under a lot of pressure. Now it is moving sharply back up and it is about to cross above the 50-week moving average on the weekly time frame, on the daily time frame. Again, you can buy the stock perhaps right now because the stock is about to break above the 50-week moving average. Put your stop losses just below the 209 or 207 price level, and then it should be okay from there onwards. Google, more retracement is due. Continue to wait for more retracement. Wait for the prices to come towards its 50-day simple moving average. Again, there is no trade with respect to Google. With respect to Walmart, no, not really looking at anything with Walmart. So once again, to summarize, before we finish off and call it a day, what we wanted to focus on with respect to the market is that the Nasdaq is still in a sell zone. You can buy it for sure. You can make an entry point, but put your stop losses below the 100-day simple moving average. It is definitely at a much cheaper level as compared to the other indices. And if and when it's not if, it's just like when the momentum will return, this particular index can really skyrocket. With respect to the S&P 500 index, there is a consolidation from between the highs of yesterday, highs of Monday, and the lows of last week. So we are trading in between that. There is not really any particular trade. The Dow Jones is very much pushing the markets higher, and it is approaching its all-time high. In terms of sectors, you wanted to look at airlines, you wanted to look at energy stocks, you wanted to look at your tourism stock, and in terms of tech stocks, I think we just have to wait for the prices to enter near the better area of support. Let me just have a quick look at a few more questions before we see. Dow Jones overbought? Not really, not really. Well, why are you focused on US stocks? What about UK stocks? Great question, Hassan. We can certainly look at it, the UK stocks next time. We can put some mix of the UK stocks, but generally speaking, the liquidity for the US stocks is much, much higher. They are more popular. And secondly, when it comes to the UK stocks, the UK FTSE is not really an index right now that is great to buy. A lot of uncertainty with respect to Brexit and everything else which is going on. So that's why I'm staying away from the UK stocks. Okay. Is it worth, sorry, let me just see. Is it worthwhile hedging a trade on momentum, and how would you do that? Worthwhile hedging a trade on momentum. I'm not sure, Mark, if I understand your question. I think I've just pretty much gone through all the questions over here, which were right here. So that's pretty much it, folks, for today. And I will see you guys same place, same time next week. And remember, if you have still any more questions, you are more than welcome to come on the YouTube channel, get engaged over there, ask questions over there, or Twitter. Once again, it's a great place for you guys to get engaged and ask as many questions as you want. And I'll try to come back to you as soon as possible. Thank you so much. And the recordings will be on our YouTube channels. Thank you.